Welcome back guys to another Zero DTE video, and today Ernie's going to be talking about the origins of the Zero DTE strategy, so make sure you stay tuned. If you're interested in becoming a pro trader, check out the link in the description where you can find Ernie's education platform. Enjoy guys.
What we're trying to do here is a day trade that has a high level of efficacy. In other words, you can make money off of it over the long term. But that's not our primary goal. Our primary goal here is to develop a strategy and develop a level of professionalism in approaching strategy. That is our primary goal. With that, we're trying to achieve certain things. We're trying to achieve a balance between making profit and controlling our risk. And by controlling our risk, that has a secondary benefit of controlling our emotions and the way we approach it. And by controlling our emotions and the way we approach things allows us to achieve a higher degree of professionalism. And the idea is that those things will all work with each other to allow us to get better and better at what we do. That is primarily what we're doing here. Does that make sense?
Yes.
I wanted to pick a strategy that had a number of potential edges, because I knew that any strategy that has like a primary edge, and that's the edge that you focused on, usually isn't a very effective strategy, or it's only effective under certain conditions, certain markets, certain seasonality. I wanted to choose a strategy that would be effective across all markets, all seasons, all conditions. And this strategy isn't something that I just made up. It's a strategy that is taken from floor traders, that when they trade options, this is the strategy that they chose to trade. Now, am I doing it exactly like they did? It's taken from them, but it has been expanded and, what's the best word to use, made more sophisticated. And they may have this sophistication built into their own stuff that I just didn't see, because I'm just an objective observer watching them do this stuff while I'm trying to build systems for them. But it's what I observed. There were certain aspects to this. First was that asymmetry and premium collection and certain risk to reward and trying to control drawdowns and control their exposure to risk. These were all things that became extremely self-evident when you started watching them for any period of time, especially when you start asking them questions, that they're doing it, all this stuff, for certain reasons, and they've been doing it for decades. So it's kind of like evolution. Over evolution, you wonder why certain birds have certain colors, or one bird has a crown and the other one has a big fat beak. It's because of millions of years of evolution. Traders are the same way. Over decades, they developed certain things that they gravitate towards that they all found would work. And so that's one of the bases that I took as a primary strategy. And it wasn't like I said, oh, let me think of a strategy. All of this sort of came to me as an epiphany when I first started looking at strategies that I could personally trade across a wide range of markets or an index or something that sort of simplified everything for me. And for the longest time, like a lot of people, I gravitated towards high probability strategies, but I disproved that they were the right way to go. And again, by looking and observing and working with professional traders and becoming a professional trader myself as an institutional trader and hedge fund manager and working with these people, realized that was completely the antithesis of what all pro traders were doing. But it was exactly what brokers were trying to push on retail traders. So that's how I came to all of this. I incorporated that with a lot of things that I learned over time in being an algorithmic trader, quantitative, and developing these strategies and everything, and what philosophies that they were generally gravitating towards. Asymmetry, strong background in randomness, and anti-fragility are all qualities that supported this idea of creating a very robust strategy that could work across a wide range of markets. Now, there's so much that goes into this strategy in terms of philosophy and methodology and math and everything else that it's hard to put it all together and say, this is where it all comes from. But it literally comes from 40 years of observation and working in the industry, from all aspects of that industry too. I worked as a professional trader, institutional trader, hedge fund manager, but I also worked on the other side. I worked with the brokers. How did I work with the brokers? I literally built the systems for the brokers. I also built the systems for the exchanges. So I've seen this industry from every single angle possible and built up these strategies based on that knowledge. I also adopted or became very interested in Austrian economics and the principles there and how real life works. And that is also folded into this. And I'm very thankful that members here have pointed out certain books that have brought it even more to life, things that I knew internally and also studied in other venues that so neatly encapsulate these ideas. And one of those books recently was that Tao of Capital book, fantastic book. Then there were another series of books that was written by by a peer of the person who wrote the Tao of Capital, a whole series of books that are very popular, where I picked up a large part of the philosophy and methodology and science behind all of this by Nassim Taleb. Understanding the nature of randomness and anti-fragility. I don't know if you know what anti-fragility means, but those are systems that gain from disorder. In other words, building up more than just robustness in a system, but one that actually gets stronger when you apply stressors to it, which is, again, the antithesis of what any retail trader does. Retail traders run away from stressors. Pro traders run towards stressors because they find greater efficacy in their overall robustness of their trading. And the other thing I found was that most things that actually work in life are completely non-intuitive. They're exactly the opposite of what you think. The other reality that I found was that the people who are pushing the normal way of doing things are usually pushing the opposite, what seems intuitive, that seems shiny, and that you should go towards for a very specific reason, because they don't want you to be successful. And I think that's another thing that you'll find that is a commonality in life too, particularly in politics and in most life. Anyone that's competitive or trying to get ahead, usually these nefarious people, they're trying to set up things and systems that seem like the right way to go, or will condition you to believe that things are a certain way, when in fact they are completely the opposite. And I'm sure many of you have noticed this, or as you get older, you start noticing these things. Trading is a lot like that. The brokers have created what I call the broker narrative over years that are pushing you towards a certain style of trading and thinking to make money, right? And it sounds all good, except that it's completely the opposite of what they do and what the pro traders that are working for them do.
Thanks for watching, guys. I hope you enjoyed the video, and if you did, make sure you hit that subscribe button and hit the like button below. If there's any questions that you might have for Coach Ernie, make sure you leave them in the comment section. Thanks, guys.